everybody. Welcome to the TraderMerlin Show. It is your Tuesday edition. We are going to be talking at natural resources, natural gas to be specific. It's a perfect day for it, seeing how natural gas is up 5.5% on the day. But as you guys know, I have the natural gas trade open. Maybe we'll discuss that. We'll see how much John will belittle me for my current position. But our topic du jour, and I love my AI-generated photo here, getting a handle on the natural gas market with John Rowland of Barchart.com. John, how you doing, my friend?
Hello, Merlin. How you doing, my buddy?
Good to see you. It's been a month or two since had you on. I'm glad to have you on because I need to figure out for myself what on earth is going on with this natural gas market. So let me start things there high level. We've seen, a 75% decline in natural gas over the past few months. What would you say would be the main catalyst as to why this thing is in an absolute free fall?
Weather. That's it.
Simply it?
To put it in one word, yeah. We just didn't get any kind of weather this year. We didn't get any weather in Europe. We didn't get any weather here in the States. And that was definitely the part of it. Then you add into the fact that the Freeport LNG factory went down back in, October of last year?
Yep.
And, you don't think that'd be significant, but they were taking about 2 BCFs a day in demand of natural gas off the market. And so to put that in perspective, we produce about 100 BCFs a day. So we're talking about 2% of the daily production was not being used to create LNG. So you had no weather, you had, a major manufacturer that converts natural gas into LNG. And then, just this unwinding, what we've had, we went into like last season, winter season, with this anticipation that there was going to be shortages, especially in Europe, right? That's what really kind of drove the whole market, right? That, Europe was going to, not get any gas from Russia, and they were coming into the winter season with, low storage, and the price of natural gas and electricity in Europe skyrocketed. Mm-hmm. And what it created was a demand destruction at the industrial level. So for instance, like fertilizer factories, natural gas is a major component for fertilizers. Many fertilizer factories closed in Europe. Aluminum smelting factories, right? They use electricity for that. Natural gas is used to convert to make electricity. So it was like this perfect storm of demand destruction, no weather, and then production still being quite significant here in the States. And that got the whole ball rolling. Now, what happened in the last few weeks, do you mind if I share?
Of course. Anytime.
Let's do this. And
almost there.
So, most folks, can you see this?
Yep, got
LNG?
It, yep.
All right, so most folks are familiar with the UNG, which is the natural gas fund. And I just want to show you, this is on our bar chart page here under the description. It does say down here that what they try to do is they try to track the natural gas price based on the natural gas delivered at the Henry Hub, which is the contract that you and I all trade. But notice down here it says that they trade the near month contract within 2 weeks of expiration. So what happened was, we all were doing this, right? Natural gas was falling out of bed, and this is the fund itself, and the price was falling. You can see here, I just kind of drew a red line, but this red here line represents volume. You can see volume was rising, and on January 24th, we reached 55 million outstanding shares. That was a fourth record high. And then within like 2 days, we got this big spike in volume, which was a capitulation. In other words, folks had been buying this whole way down, finally puked, right? We reached this kind of a stop out point. And I think it was around $10 for the fund itself. And then we got another one. And look at this volume here. It's 50 million contracts. So it was a huge amount. So the rumor was that this fund got caught over leveraged. In other words, they had too many March futures contracts. And that was, like that last leg that really kind of drove natural gas down from the 280 to we got down as far as like a 235-ish area. So that was what has been playing out in the last few weeks. So, moving forward, I think the market is way oversold. I mean, I know that you're a big, you're into this position. Now, this is the commitment to traders here. We see the largest short position uh, of our speculators, right? So I think that, there's a lot of shorts. So is there room for the market to bounce? Yeah,
and
for
you
sure.
talked about that one. So if you look at the bottom there, the short by speculators, I think, for those that can't read it, there's three different elements here that make up this commitment of traders, and the one he's got his cursor on is the speculators, and in that situation, you can see it's like trending lower and lower, which means there's more and more short positions, and going all the way back to the left hand side of that chart, which is quite a long ways away. You're going back all the way into
April.
April.
Yeah, and to like where we literally were in terms of cash prices now, right?
But
and
I'm not seeing any lows. Like, this is the lowest point that I can see from speculators being short. So, like, the highest short interest on that entire price chart.
Yeah, it's major short. But on the other side, the commercials, right? This is represents commercials. It's the largest long position, right? So they think that this is cheap gas, right? But they've been accumulating positions for quite a period, right? So there are some of these traders that have been purchasing gas, and now they're long and they're getting these margin calls, or that the hedges that they put on, they're like, well, you know what? We're forecasting that natural gas prices going in the future aren't going to go much higher because of we're coming out of the winter months and now we're into like more of a production season. So they're lifting these long hedges because of these large margin calls they got. Now, this is what I'm more concerned about. And I think if we I'll let you share a chart in a second here, but I draw a line around 260. I think that's the demarcation line for natural gas. But this is the CME group in terms of options. And, I know you're into Boyle, and that's very a short-term kind of trade.
Yeah,
but I just want to show you here that this is the April, the May, and the June contract for the Henry Hub. And notice that there's a huge put position on the $2 strike. So I don't think we're out of the woods. Let me read it real quick, just
so viewers, because it's really small. So on that on that contract he's talking about, you have 61 calls and 29,721 shorts. Just to give you
puts,
the imbalance.
Yes.
Yeah, puts.
Yes.
Right.
$2 puts.
That's crazy. So, all right, just so they can read those numbers on the screen.
Yeah, I mean, I'm sorry, I couldn't blow this up a little bit more for you. So that's big picture. I don't think natural gas is out of the wood. Short term, yeah, I think the market is definitely oversold. I'm surely think that if you look at the MACDs and the RSIs, I mean, these are the dailies. But futures markets is one of those markets where it can be, irrational longer than you can be solvent, right?
Yeah.
So, but here's that 260 value that I said. I think that is a very good number for anybody. So, in terms of if you're not in the market, I think you got to wait until see us get a weekly close above 260. But let's see what happens. I mean, we got really close to that today.
Yeah, we're at 259.40, so we're. I mean, it might even hit it in the next couple seconds, but yeah, we're just teetering right on that 260 line.
So I'm a big spread trader, right?
Yep.
Or at least was a big spread trader. So this is a spread chart that represents the April contract versus the October contract, which is the injection season. This is what we're moving forward into. This is the time when they start putting gas in, and so they start buying gas again. So this is in negative, which means the April contract is trading at a contango to the October contract. Now that's normal for it, but it had just gotten out of this Bollinger range, which is close to 70 cents, and that would be the high end of a very oversupplied market. Now normally it's, at this time of year, it's probably closer to like 50 cents, and you can see that the Bollinger Band mean on this one is around 50 cents. In other words, negative. It's right now it says negative 48 cents. So the question is, are we going to see this kind of snap back? In other words, is the front of the board going to start to rise? April contract going to rise as the back of the board stays, at the values that they currently are, and that spread would narrow. So what we can really kind of ask ourselves is natural gas rallying in the front of the board, or is it really what we want to see? Is it rallying, across the board? And what we'll probably see here is this is, again, a more of a function of oversold, right? So you can see how that the April contract has been falling a lot faster. Now they've turned here, right? Both of them are turned up. And what I'm thinking is that what we're seeing here is that there's probably more buying in the deferred contracts, because that's the months that they really need. And there's not a lot of need in the short term. In other words, the March and April contracts. And so today, with the market going up 13 cents in the March contract, yet the spread actually widened back again. So that is kind of a concern for me. So I wish I had a really clear vision on this one. I am as lost as you are.
No,
I had a long.
I don't know if that's possible.
Well.
I don't know if it's.
No, it is true.
I don't know about that.
I had a long position and I got out of it. I used risk management. I took about a 2% hit on my equity, and that's part of trading. And I'm going to do you a favor. I'm not going to buy the market and jinx you. I'll let you.
No, you do it. It's all about having your plan. I've got my plan in place. I've been walking my viewers through kind of what I'm thinking. I know when I mentioned my position, a lot of people are like, you're crazy. I mean, that's really playing with fire. And you're right, it is. However, I had kind of the overall plan of what I'd do if this thing kept dropping. Let me ask you this one. I don't have the gentleman who asked this question. See if I can actually find it.
Turn off my share for you.
Yeah, sure.
You got it?
I had a good question. Let me see if I can find this, because I like giving people... this is from Johan Vervoort. He says, can natural gas go below zero as oil did because of storage issues, or is it not the same? And I gotta... It's actually a brilliant question, because if you asked me in 2020, you go back to February and say, can oil go below zero? I would laugh and be like, no, it's not mathematically possible. Someone's going to buy that freaking oil at $1 and sell it for 20, 30, 40. But there's no way that can happen. Of course, I'm the one looking stupid, because back in April, I'll bring up the chart here of crude oil, we hit negative $40 a barrel, to which day
Right.
I'm still scratching my head going, how the hell is that humanly possible? But, when you understand the story, and thanks to people like you for explaining it to me, it's like, look, if this is a deliverable contract, so if you were holding that contract at expiration on that date, you were going to get 10,000 barrels or 1,000 barrel oil. And what you have to do is find a place to put it, and there was no storage capacity left.
Right.
Now, the question I have, and Johan probably does as well, is, are we in a similar situation? It sounds like nobody is really needing the natural gas for current markets. It seems like we're much warmer than we have been, so we're okay there. Could we arise at a situation where natural gas all of a sudden goes to negative 5, 10, 15 bucks?
Yeah, I think so. I don't think...
You're scaring me now.
I think that, that was a perfect storm too in the crude oil, because you remember there was COVID and all kinds of other things that was going on. There is still storage out there, right, for natural gas. The problem is that the pipelines or the takeaways are now full. So what happens is that, there's gas that they've already drilled and it's coming out, and that's something that they can't stop unless they turn the well off. And they really don't want to do that. So that could drive the prices at the wellheads down, which would drive the price of the Henry Hub contract down. So what I'm hearing from my colleagues in the physical market is that we're heading towards that cliff. Now, I don't think zero is in the realm of reality. I would hope that the market participants had learned from the lessons from the USO debacle, which was one of the things that caused the crude oil contract to go below zero. But that is what I just said. And, we don't know. We're probably not going to know what's going to happen or what caused a lot of this, panic selling until months from now. But there's certainly that aspect of oversupply, physical oversupply, and no means to move that. And that could drive, natural gas prices. Some of them, I've heard a lot of bearish talk. This is sentiment too, right? $1.80, $1.50. So, like I said, I don't think we're out of the woods. Like I showed in that example of that April spread, if this rally that we got, is this more of a short covering rally, or is there something fundamental there? If it was fundamental, that spread should have narrowed. It didn't narrow. So I'm thinking what we're just seeing is just a little bit of a relief rally in the front of the board. Now, what's going for you over, let's say, the next week or so is, we are getting closer towards the March expiration. And then I think all those huge short positions we saw on the commitment of traders will need to be liquidated. Now, they might roll them forward, but that might create that rally. But I don't see in the short run it getting much higher than maybe, let's say, 280, 285. But that would be the high end, what I would think.
Yeah, I'm looking at
the short run part.
Yeah, well, you got that 260 line, which is kind of that line in the sand. And you talk about 280. I'll just put a little line right around that $3 mark, just because that seems to be the next logical point after our the 1st of February, where we had kind of that big drop down on the daily here. From that point, there was talk on yesterday's show saying, is it inconceivable to see a huge rally here in natural gas? And I think it's nothing is ever inconceivable in these financial markets. I guess from your perspective, since a lot of this seems to be weather driven, that what would need to happen would be, here comes another nor'easter and we have major freezing going on the East Coast somewhere, hell, even Southern California. It got really cold here the other night. It was like 50 degrees. So,
ooh, yeah, cold.
Well, we'll get on to the cost of natural gas in California here in a second, but we could get another situation like that. Never know exactly what nature's going to throw at you, and yeah, that could spike things up. But getting up to the $5, $6, $7 range, yeah, certainly not going to happen anytime soon. I think that this all needs to prove to us that there might be a change of direction in this trend. And at this point, you look at this daily, it's brutally down, going from that peak in August of 2022 to where we are today. Lower lows, lower highs, and just right now, it's really an impressive downtrend starting back in December. And there has been no real turn at the end. Could this be it? Sure. But we just don't know at this point. I think that's, the points that John is making are very, very valid. And I'm, just so you guys know, this Boyle trade that I'm in, I'm not looking at, I'm holding this for 6 months. As I mentioned, Boyle is a double leveraged instrument which has decay to it. The longer I hold that, the greater percentage of my gains I will lose, or I will continue to lose more if I'm in a losing position because of that decay. So I cannot hold this thing that long. I plan on hopefully getting my shares taken away from me next Friday when this thing expires. Hopefully Boyle will be above 7. If not, then I'll continue to sell calls against it and generate a pretty hefty rate of return, because given this volatility in natural gas, the premium on these on UNG as well as Boyle has just been off the charts rate of return as far as premium.
Yeah, the vol is definitely off the charts for natural gas. So to your point about using one of these leverage ETFs, you talk about this decay. I just want your folks to know that every day it resets, and so let's say natural gas, even goes down tomorrow by like 2% or 3%, which is not a lot considering how much it went up today. Then the Boyle will go down like by 6 or 8%, right? And what looks like a great trade today, where it's settled at what $6.79. And if natural gas goes down by 5 cents tomorrow, which is not a big move for natural gas, Boyle could be back down almost $6. So it's really a very, very difficult market to play like you said, for the long term. So you need to be very careful with that. I
mean, from peak to from bottom to top over the last 3 trading days, it's a 24% rise in Boyle. Now, who knows if that's going to continue. I for one hope it does and gets above 7, just so I can have these shares taken away from me and be done with that trade and move on to something else. One of my viewers, Noam, has a comment. It's not actually a question. He says, there's no way $1.50 to $1.80, not worth extracting gas at that price. And I think it's not the extraction side. It's just that there's so much supply, they're going to need to be selling it at a discount to get rid of it. Is that right?
Yeah, that's exactly right. The wells are producing. The only way they can stop that, it's in the pipeline, it's flowing. Hey, there's no way they can stop that unless they go and actually shut in, which is what a lot of the major producers are saying. If the price does not rebound, in the next few weeks, that's what they're going to do. And they hate doing that because a lot of these wells, especially like, in the Marshall area, these are what are called wet wells. And when they close those wells off or shut them off, then when they turn them back on, they don't produce like they do when they're when they're running. So there's a big cost problem with them. So that's why they kind of, that's like a something that they do at last resort. So for even them to start mentioning that, that tells me that there's a lot of issues with the takeaway production. So, I do remember times when, let's go back, not too long ago, maybe only about 2 years ago, where we were in, the mid to upper $2 range for the Henry Hub. But, in places like in the Marshall, gas was only getting, 60, 80, 90 cents. So, I mean, yeah, that can happen. So it's not out of the realm of reality in terms of the real physical supply and demand picture.
Yeah, absolutely. Well, I'm using a chart here of natural gas storage. I'm sure that Barchart has something better than what I'm using, but I don't know where it's at. And
Is
just
it the EIA one?
yeah, the one that I just look at, the Forex Factory has a nice economic one, and just kind of showing the seasonality of it. Because Naum asked a good question again, a follow up, basically talking about the seasonality. Like, when do these inventories start to peak and bottom out? Well, if you notice the cycle that seems to happen here, just about every single year, it seems like starting in November, you see those inventories really start to decline, right? It's just using up because it's cold. That happens just about every November, and it's just a question of are the storage sites equipped with enough natural gas to accommodate that demand? And every year, demand it expands, and you see all of a sudden supply numbers start to drop down as far as inventories go, and that happens every November through just about April and late March. Well, we are kind of in the midst of that right now, but you notice it's really not as deep, and then that tells me that the supply is still in there, right? You're still seeing a lot of inventory. It has not gotten lower than the last 2 years, 2021, 2022. We had a much bigger drawdown in storage there. We're basically saying that they had plenty of space. Now all of a sudden, the question is, well, when does it start to rally back up here? According to this chart, and that may be March, April. So you still got a few months left of this quote unquote winter cycle where inventories have been built up. And if we get out of this in April and May, and there still is a ton of inventory, that could act as a big price depressor for natural gas going into the summer months.
Exactly. I just was reading a report that, you going into the beginning of the season, we were at maybe, let's say, a 10% deficit compared to the 5-year average. And now we're at like an 8 to 9% surplus to the 5 years average. So again, like to your point, this is every week, people pay for that storage, right? Or to put the gas in the pipelines. And, once that gas starts to flow, it's very difficult for them to stop that. So that gas is going to it's got to find some place to go, right? And like you said, that's when you start discounting gas, right? So, that's what I'm concerned about in terms of the big picture. But I still think in the long run, natural gas has a lot of tailwinds in terms about that transitional fuel, to the new green technology. I don't see how we can create enough electricity for all these EVs without using natural gas or being part of that equation. So, I mean, as a long-term investment, I still like natural gas, but I just think what has happened is that this giant pendulum that swung one way last year based on all those factors, Ukraine and what was going on in Europe and, the huge demand for LNG. And now what happened was the, market overreacted, and now very typical of futures markets, it's swinging way in the other direction. So,
and there's that old phrase we all know. Actually, here I am saying we all know it. I'm like, well, shoot, what is that phrase? The one that Buffett says, when there's blood in the streets, that's the time to buy. Or when everyone's super excited about something, that's the time you should be selling. We could certainly look at this price chart of natural gas and say, there's blood in the streets there. I mean, this is the NASDAQ. Let me go to UN natural gas here. That chart is definitely screaming that there's blood in the streets. But again, this is the challenge we have as traders, because you just don't know if this is in fact the bottom. And I kind of echo what Naum is saying no way $1.50 to $1.80. But you know what? The market has a tendency to do what most people least expect. And it's down 67% the last 35 days in natural gas. That's insane.
Yeah.
Part of me is saying, hey, I thought 250 would kind of be that bottom. We tiptoe below 250. We're back to 260 now, or right around 260. As John says, this thing could continue on down. We just don't know. And, Rob says, is there a point when the mechanics of the markets dictate the price of natural gas? And I would say the mechanics of the market are dictating the price of natural gas.
Yeah.
It's all supply demand.
Yeah. What, the other adage that I just said to you is that market would be irrational longer than you can be solvent, especially in futures markets, right? So, but we used to have old floor saying, and I know this is a more the R-rated channel, so I'm going to be very.
Feel free, as long as it's not X. We might,
Yeah, we used to call it the MFF factor.
Yeah,
right? I don't know if you know the maximum F factor. In other words, I don't know what it is, but the market always seems to create the most risk. In other words, to mess with or screw with those who think they know. And I would say that this is one of those scenarios that is going on right now, that everybody is smarter than the market and is saying no way it can go below 250, and yet here we are having a debate about the likelihood or the probability of it going to zero. I mean, would you ever have thought that, 6 weeks ago, right? You would have been, people would have said you're insane.
Well, I mean, honestly, in the 20 plus years, if I go all the way back to 1996, you look at my 27 years worth of trading, I still am in denial that crude oil hit negative $40. Like when that happened, it was literally a mind-blowing experience. I'm like, there's no freaking way this can happen. How does this it can't go to zero, right? That's you're always taught. You go long something, goes to zero, that's your maximum loss. So that actually ruined part of trading for me. My brain had to be reset to understand, well, there's delivery cost to some of these things. And you have that with a lot of these commodities, so pay attention. My mentor many years ago told me the markets are a train. Picture the market as a train going in a direction, and it tries to go in the direction with as few people on board as possible. And by the time everybody's on board that train going one way, that's when the train stops and goes the opposite direction. At this point, you now have a situation on natural gas where everybody's shorting this thing. Not everybody. I mean, you have producers, and I think you said commercials. It's the speculators that are the ones that are really cramming this thing down. They're short, and at some point, this train is going to turn around and have a rip back up. The danger is trying to predict that pick, right? Trying to predict that turn. That picking the bottom aspect of it can be very dangerous on this one. So if you are trading natural gas, be extremely careful. I don't think that this is the official bend at the end. I agree with John. I think this is going to be a temporary little pop, maybe get another a little bit out of natural gas to the upside. But right now, there might be some short covering coming in here. People closing those positions. I mean, you saw the last couple of days have been great for natural gas to the upside. Who knows how long that one will last.
So here's, we talk about being a trader, and and I know this is one of the things that you advocate among your folks is about looking at the big picture, not just the markets you're in, right? And so there was this kind of this risk on, risk off element in terms of the market, and certainly this was this risk on with natural gas. This drove price down, right? This great risk, right? And now what we're seeing, in the equities market is that there's this run to take risk on in the equities market. So a lot of times what happens in like futures markets, where money will come out of the futures markets because now there's another game in town. Right now, maybe that was the only game in town at the moment. So what could happen is that, we see, money come out of the natural gas market and just does go anywhere. It just lays there until we get into, let's say, some different economic or supply demand situations on the physical level, and money will come out of natural gas and go back into the equities markets. I think you're kind of seeing that with gold now too, with the gold market as well.
Yeah, there's a funny comment in here. I do like this one. It says, I guarantee you that's not going to happen to gold. I would agree with you. I for one, would take delivery of, you get me gold. And so this is Rob L. He says, guarantee gold.
Well,
never happen with gold and silver. I'll take delivery of gold at $1. It's just load me up.
I'm not saying that. I'm just saying of recent, right? What have we seen? We've seen risk on in terms of the equities market, and so a lot of money that had been chasing returns in other markets, shorting natural gas, long gold, that money seems to be flowing out of it as it rushes back into the equity money. That's what I was just saying.
And again, nobody here would have a problem storing gold, silver, platinum, palladium, but you will have a problem storing thousands of barrels of oil or thousands of
Yeah.
BTUs worth of natural gas. Like I don't have a big storage tin in my yard, so that would make it difficult. Interesting question here from John Todd. He says, is there much correlation between natural gas and crude oil? Obviously, both energy products. I heard somebody earlier say, well, why isn't oil surging on the East Coast or falling on the East Coast? Well, from your perspective, since you've traded both of those commodities, much of a correlation between the two?
Long time ago, there was a positive correlation, but no, they're definitely independent. Well, for the first part, mostly because natural gas is still basically a domestic market, although we now have linked to the global markets through the LNG. So there is a little bit of a dollar aspect to it in terms of how when the dollar strengthens, commodity prices weaken and vice versa. But no, it's just two different types of energies, right? Natural gas is more about electricity and industrial production, and crude oil is a transportation commodity. In other words, right, you don't consume crude oil, you consume the byproducts of crude oil, and that would be gasoline, heating oil, and diesel and all those kinds of things. So no, there's really not a core. I will say though, in economic expansions, and when we have good growth, that was where you might see them correlate positively, but that is more of an economic issue, and not based on that because one's going up, the other one's going to follow it.
There's an interesting tool I like to use. This is just a comparison table talking about relationships between different commodities. And if you look at here, you can go crude oil to natural gas. Over the last 180 days, there's a 59% correlation between the two. So there is some correlation, but it's nothing really that close. You look at some of these other ones, they're in the 80s, 90%. But no, you can imagine they're two kind of different use cases for them for those metals.
Right.
Tell me a little bit about your upcoming schedule. I don't want to keep you on here. I know you're busy and got a ton of stuff going on. I know that you do a bunch of classes for Barchart, and I hear that you have a very special event. Of course, there's a show that John does called Market on Close on Fridays, which I would encourage you guys to check out. Tell me about that and in your upcoming guests, because I'm sure a lot of people are going to want to check that one out.
So on Fridays, we do something for our premier members that is called Market on Close, and we kind of do a little bit of macro, what's kind of driving the markets for this week. We usually have a very topical subject. Last Friday I did natural gas, but we also looked at, Apple and Amazon. We talked about how you could look at trading options going into the earnings cycle, and that when the implied volatilities get too lofted, there might be selling opportunity in terms of selling options or selling the stock because the market is another over exuberance in terms of anticipation of earnings. So we that's the kind of thing we do on the Friday show. But on Wednesdays we do more of an educational show, and that is free to the public. If you can show Barchart Merlin on the Learn tab. But that Wednesday show, this Wednesday, tomorrow, I've got an opportunity to interview Jerry Parker. Now, if folks don't know who Jerry Parker is, he's the CEO of Chesapeake Capital, and he's one of the original turtles, in the first class of turtles. And he's gone on to be one of probably the most prolific turtle and most successful turtle. I think he has about $2 billion under management under the Chesapeake name. So I am super stoked about having him on. I know a lot of the things that he does in terms of turtle trading. I'm really going to enjoy talking to him. I use ATR a lot in my trading, and I know that he uses it a lot, and I'm sure he uses it a lot different than I do. So for me, it's more about I'm going to enjoy this, but I know that folks will get an opportunity and watch this. Now, I know that it might be a sellout, and we only have room for 1,000 in the webinar. So don't be discouraged. Go and sign up. And if you don't get into the webinar on Wednesday, you will receive a link for that show. And also on our Barchart YouTube channel, some couple hours later, you will be able to watch that. So if you don't get in, don't worry about it. You'll still have an opportunity to watch that. interview, and I'm really, really super excited about this.
Yeah, for those who don't know, the Turtles, it's not a rock band. You guys might remember the Turtles. Didn't the Turtles sing "Happy Together"? We will not be singing. Well, John won't be singing tomorrow with his guest in the program. But Turtles are probably one of the most successful trading group stories out there. And even if you just know the very basics of the story, the wager that happened between Richard Dennis and Eckhart, it really, I don't know, it gives you optimism and hope that anybody, in my mind, can be a successful trader as long as they follow rules and are extremely disciplined about it. It was before my time to be involved with the Turtles. I wish I was, but sounds like it's going to be a pretty awesome show tomorrow with Jerry Parker. I'm actually making my reservation right now, so I will be in there, one of those thousands of people. I would encourage you all as well. I can post the link to it just so we can help out there. Let me just copy this over, paste it into the chat for all.
Yeah, it's going to be really cool.
The price is right.
Yeah, exactly, right. I don't think anybody's going to complain about getting a refund, that's for sure.
All right, I have to just send my file. There it is. So now I'm in. So I hope I beat everybody else. I'll sell my space. It's a supply and demand thing. I'll sell my space to anybody out there wants. So you got this show. This is Wednesday webinar. You typically do one a week, right?
Yeah, about 3 a month on average. Yes.
Yeah. And then his Friday show, which is the premium members, and I'll get on there one of these days. I'll get on there. We'll give you some crypto update or.
Yeah, we're gonna do. It's be honest with you. The old joke. Henny Youngman once said. He said, "I know a good joke when I steal it." So my show is pretty much formatted kind of like what your show is. So
I love it.
I thank you for that.
My pleasure. But, and if I can help you make it better, let me know. Whatever I can do to help, man.
But yeah, it's light. It's kind of macro down to the micro level, and we have like some goofy segments. We have a pick of the week where we find a trade that we like, and lately some of our picks haven't been that great.
It happens. It's funny. It's funny you mentioned that because I actually was talking with my viewers about that. One of the reasons I don't do picks anymore is I had one guy who just, I guess, went all in on a pick that I'd made. And when I make a pick, I'm saying, here's the entry, here's a stop loss, here's the price target. Most important part of that is the stop loss. And this guy lost a ton of money, and then he threatened to sue me because he lost a lot of money. I'm like. So I just gave up. I stopped doing those picks, but maybe I'll bring them back. Maybe you can inspire me to bring the picks back to my show as well.
Yeah, but a lot of my picks, we have a page on our site. It's called the investing page, and we have categories different. And all my picks come from there, and so it's kind of just showing folks how to use the bar chart. But some of them, I did the natural gas trade and I lost, but like you said, I used risk management. I said, this is where I'm going to stop myself out. And I did. And that's what happens. And that's part of trading. Right. Okay. But, one of the trades that I pointed out, maybe let's say 2 months ago, we noticed there was a lot of inside buying in Dave and Buster's, which is the stock symbol is play.
Yep.
And, I didn't understand why somebody would want to buy. I mean, I don't know if you've ever been to a Dave and Buster's.
I like Dave and Buster's. It's like an adult. It's like, Scandia was for kids. It's kind of like you could get to go get drunk and play video games. Like, what's not to like?
I get it. But, going into uncertainty of economic times, and,
Sure.
You wonder if the consumer hasn't, money to spend $50 on, Pac-Man and
skee ball,
skee balls and chicken wings. Right. So, but the stock, we looked at the trade and the stock, is up like 30% since that insider buying. So, I mean, there's things to be learned, and I would encourage folks, especially my Barchart users, you can go for a free subscription for 30 days and you can check out these Friday shows, and you'll see that, there's a lot of value in the stuff that we talk about on Fridays.
Nice. Rob just deleted his comment. I want to ask you this last one, just because you talked about the turtles and he was referencing market wizards, and I'm just kind of curious on what your thought of this one is. Obviously, the original wager between Richard Dennis and Bill Eckhart was, one said, "Hey, I can make anybody a trader," and the other guy said, "No, you got to be born a trader. This is something you're just born to do." Which camp do you fall into?
I believe what Richard Dennis proved is that if you can follow rules and stay disciplined and don't let emotions get involved. And now, as human beings, that's very difficult to do. that you can be a successful trader as long as you have a game plan and you execute that game plan. But Dennis also said that, I could give somebody all the rules and they still mess it up.
Yeah,
So,
right.
because people won't follow the rules, right? So, I'm in that camp. The funny story is that, that the movie Trading Places with Eddie Murphy is loosely based on the Turtles.
Mm-hmm.
So, if you wanted to watch what happened in that, so, and not the Dan Aykroyd character was running around in a Santa suit assaulting people. I don't know if that happened in real life.
I'm pretty sure. I'm pretty sure that a lot of the people that signed up for the Turtles weren't rolling around in the street in a little cart trying to beg for money. You never know. You never know.
I don't know. But I think they were just well-educated young men that got in there and got in at the right time, and if they follow those rules, I mean,
And it's interesting because you follow the rules, and if they were monitoring them, and if as you were following the rules, if you stuck to the rules, then they would grow your account, allow you to trade more.
Yeah.
And I mean, for my viewers out here, you guys know that's exactly the same advice I'm giving you as let's call it a coach or a mentor. It's like, look, start really small and follow your rules. If you find you're breaking your rules, then stop trading. If you find you're following your rules and you're making mistakes, make some edits that you need to fix. And then once you prove that you can be consistent with a small amount of money, you start to increase and increase and increase. But unless you have a plan, unless you have rules, you'll be shooting from the hip every time. You'll never be consistent. And those people will never make it as traders. In my opinion, I am in Richard Dennis's camp, which says I believe that anybody can do it as long as you follow those rules and have a plan in place. And you can always modify these things. So markets dictate change all the time. So anyway, I'm looking forward to your session tomorrow. It should be a pretty good one.
I'm looking forward to it. I want to ask you one question though. I know that you're doing this AI art, right? So not to plug this company, but who are you doing it? Because I love the art. It's so cool.
I'm going to show them a couple more right now. Here, everybody. So you saw the one I used for John today. Here's another one. It's called "How to Handle Natural Gas Markets." But look at that picture. It's like he's got this glowing orb of natural gas in his hands and he's smiling behind it. And then I have this one as well, which is a little. This is the one I actually used today. But if John said, hey, I don't want my face on there, I was going to use this one. I love this graphic right here. And basically I just said, I want a blue flame like natural gas burning money. And this one is so freaking cool. I use a program called Midjourney, midjourney.com. At the beginning, it was free. You get 200 queries. But now I once you start, I just blowing through 200.
You blow through it.
I subscribe now. So it's pretty cool. It was fun. Actually, your picture came out really good. I like it. If you want them, I'll send them to you. You can use them for whatever you like because there is no copyright on it. No Getty Images saying it's mine, it's mine, it's mine.
It's original art, right?
Well, here's the thing. So I was building content for my former employer, and I had a picture of Jerome Powell in there, and the legal team was freaking out saying, no, we cannot use any likeness to Jerome Powell. I'm like, why? I got it from Creative Commons. And like, no, you can't do that, You have to. So now I'm like on my show, I'm using all AI generated stuff. Even if Getty comes in and says, that's our picture, I said, no, it's not. It's actually generated by me.
Right. And he's a public figure, so why can't you use his picture, right?
There you go. We got, Tom wants to know, who's the hockey player in the picture behind you? Is that the Miracle on Ice?
Yeah, no, it's close. I don't know if you can see that.
Get your mic in there.
See if he can guess it. I'll give him a hint.
The Rangers,
Captain,
right?
Yeah, that's the Rangers. Captain 1994. Oh, 95. 95.
I had no idea.
Conn Smythe winner.
No, if it's not Mario Lemieux or Wayne Gretzky, I don't.
It's Brian Leach, first American Conn Smythe MVP of the Stanley Cup winner.
Wow.
Defenseman, Hall of Famer. When I was working on Wall Street, I was hanging out at a local bar, and it was one of the bars that he would visit. Now, I wouldn't say he was like my best buddy, but we were acquaintances, and we'd throw in a few beers every once in a while. And he was a pretty cool guy. Nice. So I was always a big fan of him. I think he's just a great player. But he actually gave me this, so I'm very proud of this one.
Cool. And people, it's funny when so I use a background, a green screen over here because people are like reading your books, going, "Hey, do I see options as a strategic investment on this bookshelf?" Yes, you do.
Yeah.
Yes, you do.
There's my old floor badge right there.
Floor badge. Got the Bulls and the Bears out there. Yeah, it's cool.
Yeah.
All
All
right.
the secrets.
I won't torture you any longer. He's got all. One day we'll do a show called "Walking Through John Rowland's Cabinets."
Yeah. But there's Einstein's Book of Relativity I found in a flea market. I mean,
What? Like an original copy or
Yeah. In
Wow.
19 something. It's a paperback though. It's disintegrating, but it's still a pretty cool book.
Still a nice piece of history out there. Hey, well, John, thank you so much for coming on today. I appreciate it, and I appreciate all that you do, not just for my viewers, but also for Barchart.com. If you guys want to register for his workshop, here is the page. You go to Barchart.com, click on Learn, and then that will bring up a whole bunch of different options. You can see the upcoming webinars, which will get you into the session that is going to happen tomorrow at 10 a.m. Pacific time. That will have the CEO of Chesapeake Capital, which is Jerry Parker, one of the original Turtles, which should be a pretty awesome thing. That'll be a 1 hour session. I'm already in there, so if you guys get locked out because you couldn't get in, maybe I'll sell you my spot.
Remember, we got a YouTube channel where all of our Wednesday shows end up on that. Usually takes about a couple hours. And then if you're interested on the Friday market on close, you can do a 30-day subscription, trial subscription, and that will get you into the market on close. I'll give you a hint, though. We're not doing a Friday show this week, so don't do it this week. Join next week.
Start next week.
So you can get more out of your subscription.
Awesome. Hey, man, well, thank you so much. I appreciate it. Thanks for coming on. Maybe I'll see if I can get you back on next month. Have a great session tomorrow. I'll be in there on the sidelines.
Always a pleasure, my friend.
Right.
Be safe and be healthy out there. All right, my friend?
All right, you too. Take care. Yeah, that was John Rowland at Barchart.com. Again, he does almost every week does a webinar for Barchart, and I would encourage you to check those out. There's also an archive there. I know a lot of you love free education. Well, he is a very good educator. I had the opportunity working with him at Online Trading Academy, and now he's for Barchart. You can see here, swing trading, futures guide to trading, multiple time frames. So a lot of good stuff out there that John is doing with regards to content for free for all y'all. So I would encourage you to check that one out. Okay, I did not have a chance to put together all of the economic announcements and earnings calendar stuff for tomorrow, so I will have to do that on the fly here. As you guys know, I love doing things on the fly. And by the way, I know I have some new viewers here. Maybe come over from Barchart. If you guys are new, hit that subscribe button. If you like the show, click the like button. I do the show every day, Monday through Friday at 2 p.m. Pacific time, and it is free. So let's look at what's happening out there tomorrow. So Zacks, gotta love Zacks. You go to the earnings calendar for today. There was a lot of mix out there. You saw BP miss, you saw Illumina beat, and those are two of the major names reporting. And then, down here, I don't really pay too much attention to the smaller cap companies, but the two that we talked about yesterday, BP and Illumina, missing earnings, although BP was soaring today up 8%. That's probably just joining that little crude oil rally. As far as economic announcements for tomorrow, let me go up here real quick, and I was showing the natural gas inventories. Let's go to tomorrow's session to see what we have cooking. Here's Wednesday. You have FOMC member Williams will be speaking. You also have Barr speaking, final wholesale inventories, crude oil inventories, as well as FOMC member Waller will be speaking. Now, the charts today, right, this was interesting. I mentioned on yesterday's program, watch out for Jerome Powell, right? Anything he says can cause huge moves in the market. And lo and behold, today was just brutal. I mean, when he came out with his comments about the market, here's the 5 minutes. It ripped up, and I'll just do percentage gains here because I love looking at percentage gains. From the moment he started speaking, things were rallying up, 1.93% up for the NASDAQ. Now, from that point, though, it fell. From 1.93% gain, it dropped 2.5% in the next 8 bars, the next 40 minutes. It dropped at 2%, and then all of a sudden, running into the close, we saw it rally off of those lows about 2.88%, finishing the day up 2.09% for the NASDAQ, which made it one of your better performers out there. Crude oil was actually your best, up 4.09%, and it's still going in the after-hours session. So a lot of real good positive stuff out there for the markets. A lot of people feeling optimistic about Jerome Powell and interest rates going forward. That said, I will look at one more little piece here for today, which is going to be the FOMC forecast, what the rate's going to look like. Which companies do I like after the close, or did you like after the close? None in particular, Michael. I don't really care so much about things after the close. I'll reevaluate just for chart patterns. But here is the forecast for the 22nd of March FOMC meeting. Right now, they're expecting it to jump 25 basis points. That's a 92%. But notice it's starting to creep up ever so slightly to 50 basis points. Last week, there was a 0.3% chance. Yesterday was 3.3%. Now it's 7.8. So you're starting to see the probability back on the table of maybe 50 basis point increase on the Fed funds. Of course, right now, most are going to agree, and I am in this camp as well, that we'll see 25 basis points at the next meeting, unless we start to get some really bad economic data, which could happen, right? You may see some really bad stuff happening on that economic front, and that could trigger maybe the higher probability of 50 basis point increase at that next meeting. Now, for earnings for tomorrow, you've got Dominion Energy, you've got Disney, you've got CVS, Wynn Resorts, Under Armour, or some of the companies reporting earnings tomorrow. Did Powell say something significant, or was it just same old? He really didn't say anything that was out of the ordinary. I feel like people felt he was just a little bit more dovish on the markets. So, still reiterating he needs to see significantly more data changes. So it really felt like a rehash of Wednesdays. But again, my caution, my advice to anybody that's trading is like, when you see his name on the calendar speaking somewhere, just write it down, because you know that all hell can break out, and he didn't really say anything new or out of the ordinary. It's just something to be careful of. All right, that's going to do it for me for today. Again, if you like the show, hit the subscribe button or give me a little thumbs up. If you didn't like the show, email me and tell me why. TraderMerlin@gmail.com is a way to get in touch with me. If you have a topic, something that you would like me to talk about on tomorrow's show or on Friday's show, put it down below any of the YouTube videos. You just pick any of the TraderMerlin YouTube videos. You can do it on this show. Just comment down below, and I'll incorporate those into the slides. Tomorrow, I do not have a guest. And then on Thursday, we're going to have Justin Krebs come on the program, talking about long-term aspects, financial planning type things, so bigger picture items there. If there's something specific you want us to discuss, just let us know. All right, thank you guys so much for joining. Hope you enjoyed John Rowland as much as I did, and have a new little maybe perspective on natural gas going forward. Learn something on the program as we try to do every single day. I will see you all tomorrow. Take care and send in your questions. See ya.